Welcome everybody, Dre Parker here, your money, legacy, and life coach. I help you design, grow, and protect your money and legacy so you can live an extraordinary life. I want to go over the misconceptions of mortgage interest. There's so many people out there that says, oh, I have a 2.9% mortgage interest, or I have a 5%. Well, here's the reason, or here's the truth on why you should pay this off. I want you to learn why it's important and it's in your best interest to become consumer debt free. So for those who don't know, the Money and Legacy team, we're a group of financial professionals, real estate professionals, CPAs, attorneys, investors, entrepreneurs, mentors, and coaches. So let's dive in. So when it comes to making purchases, you have two types of people, and each one of them starts off at the line of zero. So the saver who saves to purchase misses out on interest. And the spender who charges to purchase pays interest. So let's take a look at the cycle. The saver, you could take a look. They'll save their money. They're saving their money. It's growing. And they have enough to finally buy that purchase. And boom, they use all their money to make that purchase. What happens is they miss out on the opportunity to make interest on that money because it's all gone now. And the cycle continues. They'll save and save again for the next purchase, and boom, they start this cycle over and over again. Now, it's a little bit better than the spender, but it's still the same thing. You're missing out or you're paying interest. Now, the spender charges to make a purchase, right? They pay down the debt, and as soon as the debt is lower, boom, they go again for the next cycle. They charge for the next purchase, and the cycle continues. They'll pay down the debt on the charge card, and boom, they'll start this process over again. So I want you to understand two key concepts to learn: interest volume and loss opportunity cost. With interest volume, when you finance a purchase, you pay interest to a bank, and your money is gone forever and will never earn you anything. I want you to always remember that. The loss opportunity cost, when you pay cash for a purchase, you give up interest or investment returns you could have earned somewhere else. So I want you guys to always remember these two concepts. So this is why I want to share with you on why it's important for you to become your own bank. So I want you to become your own banks. I want you to do what the banks do. When you take a look at the structure, Bank of America, Wells Fargo, JP Morgan Chase, you're looking at where they put their money at. Bank of America put $14.4 billion, which is 15% of their assets, into what we call a tier 1 capital or a tier 1 asset. Wells Fargo put $16.56 billion, which is 48% in tier 1 assets. And JP Morgan, $7.87 billion. For those who don't understand what a tier 1 asset is, it's safe from creditors. It's safe from Uncle Sam, so that money is tax-free. It's a high level of liquidity. It's safe from market volatility, so there's no market losses or volatility when it comes to your money. And it has a legacy component. And for those who don't know what that is permanent life insurance. Let's look at the process and how it works when it comes to you making the banks rich, as opposed to you becoming your own bank. You deposit money into the bank. The bank turns around and they loan out your money. Now, they use what we call borrowing capacity to make massive profits off of your money. If you put $100,000 into the bank and they turn around and give you 1% or even 4% on that money, they turn around and they can actually loan out 9 times the amount that you actually deposit. So in that example, that could be $900,000 in loans. And the interesting thing about that is they put that money out and lend it out into car notes, mortgages, credit cards, personal loans, business loans. And they make anywhere from 5 to 25% and sometimes more on the borrowing capacity of the money that you deposit. So what that does in return is it makes the banks super profitable, and the cycle continues over and over again. So I want you guys to remember those two key concepts that I share with you, which is interest volume and the loss of opportunity cost. So here's the myth. I'm only paying 5% interest on my mortgage payment, so why should I pay the thing off, right? Well, the fact is your true interest percentage, or what we call tip, is actually more than you think. And tip is actually in your mortgage documents. A lot of people aren't familiar with this, but this is why I have to share this knowledge with you so you can really understand. So in this example, let's give the example of a 30-year fixed mortgage off of $300,000, right? So you have a $300,000 house. Your monthly payments are $1,610 a month. Now, any amortization schedule can show you this, but let's analyze this a little bit further so you can see what I'm talking about. We're going to take a look ahead. So let's look at the real interest rates that you're actually paying on this mortgage. So we'll start from month 1 or the first year. We'll go to year 10, we'll go to year 20, and we'll go to year 29. So you can see what you're really paying on this mortgage. So this amortization schedule calculator shows $300,000 mortgage, 30-year term, 5% interest, which is fixed. This is 2017. So if we take a look at it, the monthly payments are $1,610. The total payments is 360 payments, which means that you're going to pay a total of $279,767 in interest. And if you pay everything on time, your scheduled payoff date is September 2047. So let's look at the real interest. So out of that, the first month you make your payment, out of that $1,610, you are paying $1,250 in interest. If you take that $1,250 in interest that goes to the bank, divided by the $1,610, your true interest percentage is actually 78%. Now, I know some of you guys are like, what? Wow, where's the 5% at? Right? Because out of that $1,610, $1,250 is going to interest. And as you can see, it goes down as time goes on, but let's take a look and see where it's at in year 10. Year 10, 2027. Let's take a look. Out of that $1,610, $1,009 is going towards interest. So now your tip, your true interest percentage is actually 63%. Where's the 5%? Let's go down a little bit further. Let's go down 20 years. 20 years, $620 is going towards interest. So what's your true interest percentage there? It's 39%. Well, let's go down a little bit further. Let's go down to year 29. Year 29, if you take a look, out of that $1,610 monthly payment for your mortgage, $85 of that is going towards interest. So as you can see, as time goes on, out of that payment, the interest goes down, but it's at 5.3%. You got to wait almost 30 years to get that 5%. There is a better way. Now, before I go into any of that, let me ask you two important questions. Are you 100% sure you will have a great retirement, ever reach financial independence, or do you have any doubt? And the second question I got to ask you is, if I can show you a way to eliminate all of your debt in 8 to 9 years, including your mortgage payment, with the same money, would you be interested in learning how? If you answered, I have doubt in the first question, and if you are interested in learning how to pay off all your debt, including the mortgage, with the same money, I want you to click that button below so you can schedule a free consultation with somebody from my team. Now, so you'll understand, your financial landscape is more than just consumer debt. So the Money and Legacy team, the products and services and things that we do to help our clients with their money and their legacy is we offer free financial education courses. We do financial discovery plans, which is our financial independence tracker. We help with debt management and debt elimination, enhance your credit score, cash flow solutions. We work with people with their 401k, 403b, or their IRAs, their retirement accounts, help with college planning, life insurance and annuities, short-term and long-term disability, Medicare plans, health, auto, and home insurance, long-term care, basic and advanced estate planning, business succession planning or business continuation planning, leverage planning, teaching you how to actually use leverage to build wealth, or what we call OPM, other people's money to build wealth, wealth management, business funding programs, premium financing strategies, buy-sell arrangement for people who are in business together, real estate professional services, financial professional services, retirement planning, tactical asset allocation, and of course, group life and health insurance. And it all starts with this. This is our 7-step money and legacy financial independence tracker. Now, no matter what your goal is, right, whether it's becoming debt-free or making millions of dollars, right, and becoming financial independent or creating generational wealth, we start with dreams, visions, and goal. A lot of times people have a vision, but their vision haven't caught fire yet when it comes to their money and legacy. And that's what the Money and Legacy team helps you with. We help you build a solid foundation. And if you have a solid foundation, we may look and see what possible threats or different opportunities that might be on the horizon when it comes to building a more solid foundation. We also help with debt management, as you can see, building and buying assets, legacy planning, which is preserving the wealth, which is very, very, very important. You build these assets over your lifetime. We want to make sure that we have the right infrastructure to protect these assets in life and during the transfer phase upon death. It's important that we help you understand the importance of your money and legacy annual reviews, because life is constantly changing. And the last thing is preparing the family for the wealth. If you haven't already, make sure you go to mymoneyandlegacy.com, click on the generational wealth framework, and you'll get access to my Infinite Legacy Blueprint, our 5 key components to help you build generational wealth and sustain it for absolutely free. Again, that's the Infinite Legacy Blueprint. You'll get access to that for absolutely free, which will help you with those 5 components, because 90% of high net worth families lose their wealth because they don't follow these 5 key components by the 3rd generation. Remember, everything starts with the Money and Legacy Financial Independence Tracker. You want to start on your journey today with a licensed professional? Click the button below so we can help you either eliminate debt, build a solid foundation, help you with your goals, dreams, and vision, making sure that you're buying and building the right assets, preserving the wealth, making sure we review your plans, and making sure that you're preparing the family for the wealth. My name is Dre Parker. I'll talk to you soon.